Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. We just wrapped up our interview with Neil Twa. Anthony, what was a takeaway that you had?
Man, there was a lot. This webinar was very informative. And honestly, this is one of the reasons why do you know why I enjoy our podcast?
You get to hang out with me?
No. What you might think is I get to poke fun of you in public, but learning all these opportunities.
Yeah.
Right? We go back 15 years ago, all I really thought, all right, maybe you're self-employed or you invest in the stock market. But man, there's so many ways to create passive income or to start a business. And what I liked about what Neil was talking about is creating an Amazon brand, right? But what is unique is we're starting with the end in mind. We're creating this business and designing it and running it to maximize the sale in a few years.
Yep.
And really, if anybody has a business, odds are that is your biggest asset. And so you should be thinking about working it now to maximize profitability when you sell it, no matter how far that is. And, you know, a lot of what our goal is, passive income bigger than monthly expenses. Owning a business, I think, is one of the fastest ways to get there. So, Cam, what were some of your takeaways?
I had lots of information. The big takeaway that I had is, man, most people will go to college for 4 years to secure a generated income of around $100,000 a year. Neil, as you listen to this webinar today, he will teach you everything you need to know to make $100,000 a year in 4 months.
I don't even know why I'm even speaking. You summed it up very well right there.
Exactly. That's my takeaway, right? That's what's missing is somebody out there teaching you how to build a business from zero or from A to Z, right? And he can do it in a matter of 4 months. Yeah, you got to have some capital to get it up and going, but man, what an opportunity that there is available for you. Guys, listen, before we jump into this, a couple things. First one is, as you listen to this podcast, you're going to realize pretty quickly, number one, that Neil knows what he's talking about. Number two, realize pretty quickly that we are just touching on the tip of the iceberg here. And so what we've done with Neil is we've actually secured not one, but 3 follow-up presentations explaining kind of how to build this business. And really what I want you to do is mark your calendars, is because it's going to be from June 6th, 7th, and 8th. It's going to be at noon Pacific to 1:30. So 3 days, he's going to be presenting for an hour and a half, and he's going to be touching on who am I selling to, what products am I doing, and how to structure this business. And so you're not going to want to miss this. Real quick, before we wrap up, I do want to give kind of a shout out to Spinner Gooch. He gave us a review on iTunes. He says, appreciate the content and mental gymnastics, challenging conventional thinking to create opportunities for personal and financial growth, and gave us 5-star review. Spinner Gooch, great name, and we appreciate the content. Awesome. Real quick, let me read a little bit of bio on Neil before we sign off. Neil is the founder and CEO of Voltage Digital Media. He's been launching, operating, growing private e-commerce business for almost 10 years. As of today, he and his clients have sold over $100 million in physical products, primarily through the FBA sales channel, which is what he's going to discuss today. Neil shares his blueprint for how to build an online business that can generate a passive, 6-figure, almost automated income in just 12 months while setting up the business for potentially millions in sales within the first 18 months. You guys, enjoy this podcast.
Welcome to the Infinite Wealth Podcast, where we teach clients how to build wealth and create passive income without the risk of Wall Street.
Neil, I got to tell you, man, we are excited to have you here with us today. And I know you're going to get to your background and kind of intertwine it. So let's just jump right into it. How's that sound?
Let's do it.
Awesome, man. I know that kind of e-commerce has taken off over the last couple of years, and there is a lot of confusion around e-commerce. I have some clients that are doing some business models online, but we went out, we found you, which is kind of our resident expert on this matter. If you could maybe give us kind of a 30,000 foot overview of what's available out there on e-commerce and maybe some of the pros and cons that people need to look out for.
Yeah, man, great question. So there is e-commerce itself is just a generalization of a product or a physical product movement to an end consumer. You and I, we're consumers. We get products from e-com through virtual, online. We don't necessarily go down to the local stores. That is e-commerce in general. A product usually is product that is delivered to us. So there are a lot of different ways to do that. You can do what's called direct to consumer. That's where you build up social media or paid traffic media and you send them to your website and you convert them into a customer. There is the idea that arbitration, retail, wholesale, or online arbitration is that I find a product that is low selling in terms of, well, I shouldn't say low selling. It is actually maybe a low quantity. I find a couple products on clearance at Walmart, or I found this product online. I bought it low in price. I see it sells for a higher price point. I sell it at that price point and make the difference in the profit. I have to churn through that a little bit. I have to go to the retail stores. I have to maybe go online and look at arbitration. That's another model. And then there's what's called FBA, or fulfilled by Amazon, which is another model on the Amazon platform, unlike, say, an eBay or a Walmart or a direct to consumer on your own website, where you can utilize Amazon's platform called Fulfilled by Amazon, which, by the way, Amazon and FBA are actually separate companies that are working together. And they work so close now, people think, it's Amazon FBA, but it's actually two companies. The end result is they allow me to use their infrastructure. I put my inventory into that infrastructure. I don't need the warehouse. I don't need the employees, manage the logistics. And then, Amazon ships that product to the customer, even manages the returns if I need them to. They handle the customer support and they deliver that last mile to the customer. And I can utilize that platform so it doesn't require me to have employees. I don't need warehousing. I can run it from 40 acres in the country on a, internet powered by squirrels. And I can do that anywhere in the world. So there's a number of different ways to do e-com, right? In the way that you would, define it maybe in your terms of doing it now or what you've considered doing it. None of the ones that I deploy, to be very clear, are what I call a side hustle or a hobby business. Once upon a time, I got my start in that back in the day, about 2011 and 12. When I got involved in the e-com world for Amazon, I was involved in the lead generation, mobile lead generation and paid traffic, basically making money buying leads for smaller amounts and selling them back to the company for a higher amount and making the difference. That's mobile lead arbitration is what I used to do before I got started on Amazon. And I was actually doing that for companies that sold digital products and physical products. And I said, hey, why don't I just start selling my own physical products and brands and do the same thing for myself? Because I was getting really good at it. And someone introduced me to Amazon and said, hey, you should check this out. It's a big marketplace. You can sell on it. I like to jokingly say if it was like eBay, I would not do it because eBay is like a garage sale thing. And I'm a business guy and I'm looking to do business stuff. Want to build, want to scale fast, etc. I said, no, you got to check this thing out. You can sell your products on Amazon. So I did. Now for a better part of almost a decade, it has been the primary focus of my business and our software, companies, people, processes, training, our own brands, scaling and exiting. So we've been able to build serious e-commerce businesses starting with that platform. Moving it out to the customer, literally to their household, and then moving those successful brands into the direct consumer space and out to mass marketing. So that's a good component of what I've been focused on for about a decade now, is managing that platform.
Awesome. So what I got from that, right, you probably gave us a lot there, but the fulfillment, we're going to use Amazon, and then the business piece to it is really kind of what you focus on identifying the product, who you're going to market to, and then how to scale that. Is that right?
Exactly. Yeah. Processes of the logistics, the marketing, and the business management, and really understanding my customer very well. Because doubling my understanding of my customer will double my revenues. And that's what a lot of people miss about what we do.
Well, let's start right there then, is the customer. How do we identify kind of the demographics?
Yeah.
Who we selling to?
Well, I can skip the end of the line for you real quick and tell you're going to sell to women 27 plus. They make up the majority of Amazon sales. If you have a lady that fits that demographic in your house or life, you probably know they order from Amazon a lot. They also order from online a lot as well. They're the predominant buyers of the household. Men may make the larger purchases typically, or see the decision-making process at bigger purchases with, of course, their wife or significant other. But many of the minor purchases, daily, weekly, monthly purchases, are made by women 27 plus for the household. They're doing all kinds of stuff. They're buying their husband's stuff. They're buying their kids' stuff or significant other people's stuff. They're buying all kinds of stuff for all kinds of needs, wants, and solutions. So we kind of narrow it down to that demographic. And then we have to look at what are they interested in? Are they interested in cooking? running, athletics, building a business. What are the kind of things that they're interested in? And from there, you can actually start to spin out a lot of ideas. It is the culmination, as you and I were saying a minute ago in the green room before we got going, the culmination of what the heck do I sell? It always comes down to understanding the product, right? But the product, actually set the product aside for just a second, because the product is just the median. Like a home is a median in a real estate transaction deal. The bank will not lend you money directly without a home between the two of you. In the deal in which I'm reaching the customer for this acquisition, I am giving them a product in exchange for their money. And what I'm getting from them is the customer. That is their potential additional product purchases. That is anything that I can sell them again in the future. That is things called customer lifetime value, their average order values, and other metrics that run the e-com model and go by the numbers. So as I look at that avatar, one of the things I have to ask myself is, what are they typically kind of buying? And one of the fastest ways I get people to sort of understand that, because now there's over 125 million Americans using Amazon Prime, and probably you guys too. Allergies. I'll make excuses here for the next 30 minutes because allergies are crazy.
I'm with you.
It was worse than I thought it was going to be as we started talking, but look into your own history. Like, you are probably able to go at least 90, maybe a year back on your Amazon account and look at all the purchases you just made for the last year. It could be, 10, 20. It could be like my family, 599,000, but it's usually probably a lot. And to that degree, what you need to understand about that data is, if I'm just looking right now to just say, what in the world could I possibly sell to people? Understand that Amazon's platform, where people sell and deliver the products, and click the little add to cart button and buy the product. The typical amount of sellers is over 70% of them on the platform selling are actually third-party people like me. The other 30% are made up of major retailers and Amazon itself. So the majority of the platform products, meaning about 7 out of those 10 purchases roughly, are going to be by third-party sellers. So when you look at the product, you're going to usually be able to identify that it was sold by somebody that's not Amazon. And if it's not one of the major brands that you can name, then it's probably a third-party seller. And why is that important? Well, the majority of that Amazon traffic, that .com purchasing, the 630 plus million a day that's going through their system, is going to people like us. It's going to third-party sellers. And that's a powerful thing to recognize. I know, because people like to, argue Amazon, the great corporation, the great, monopoly, or this great thing. And they like to yell at it a lot of times. At least they do at me online. But the end result is that, it is made up of a lot of small businesses. A lot. And there's where a lot of opportunity comes. So as you're identifying that person and asking, what am I going to sell? What is it you've been buying is always the first question I ask people. And as they start to look backwards into that, they start to see the type of products they've been purchasing. We'll just make a list. Just grab a notepad, a pencil, paper, your iPhone and notes, and just start writing down those products that you purchased and start thinking about why you purchased them. Was it a solution? Was it an emotional purchase? Was it a gotta have? Was it a solving a problem for the house or something I needed to get? Like, I just installed this morning these little hydraulic compressors that go on doors in order to help them open easier or close easier, because we built this bench into the wall in the living room my wife wanted. It's like this home style, a bench that lifts up, and all the girls' homeschooling activities and books are down inside of it. And the lid is like really heavy. So it comes down, and mom is like, this is going to crush somebody's fingers, and probably will at some point. So dad was installing those hydraulics I bought off of Amazon in order to solve that solution. And the solution wasn't really the hydraulic that I was looking for. It was the median to a solution that I don't want to go to pay a doctor bill, or more importantly, I don't want my kids getting, or friends' kids getting their fingers slammed in there and having somebody get some broken bones and stuff. So I'm doing something to solve that important solution. And the more important that solution is, the more critical or emotional I think about it, the more it's tied to a challenge, an event, an activity, or something that's very important to me, or the safety of my family, or other things. I'm willing to pay a lot more for those. And this is where we get into a little bit of the business thinking, the numbers. It's very important to analyze those products and just look at them and say, well, was that a $19 product, or was that a $19.99, or was it a $49, or was it an $89? And as you get up in those higher price points, the low, medium, and high price points, what I call tier 1, tier 2, and tier 3 buyers, all right, you're going to have people who usually buy around $30 or less in large volumes. They're not usually as emotional driven. They're more price sensitive and review sensitive to the products. And then you're going to have people who are, $50 to $100 in price point. Those are more the tier 2 people. And they're looking around kind of saying, well, I'm solution oriented and I got a problem I want to solve, but I'm willing to balance money with the problem and solution. And then what you typically see is for those of us willing to pay more than $100 for something that's in the same category, we're usually very hyper solution driven. All right. Let me give you an analogy of what that looks like and why those numbers are important. I literally just had a problem with my tooth the other day. It was a little cavity, hairline fracture right there in the back that I had originally sealed like 5 years ago at the dentist. I'm like, yeah, just do that. He's like, we can probably put that off for a while and it'll maybe be down the road. Kick rocks, right? So it starts to really hurt. And I get down to the dentist and she does some work on it. And apparently I'm weird because I can't get numb right because she can't find the typical location for my nerve. So she's shooting the snot out of it. Well, we get to the end of this and she's like, you want me to keep shooting you or just finish? And I'm like, just finish. So that was really painful. Don't recommend that. Go ahead and let her finish next time. The end result is a month later, I had to go back last week to get it completely redone again. Well, this time she hit me with the super big guns, etc. See, the thing was that I took the cheaper solution of the first round, in the less pain. What I should have done in that instance, instead of just saying, okay, here's your 1 hour, $200 solution, what I should have said was, what can you do faster, even though it costs me? She probably would have said, well, here's the 10-minute solution. It may cost you $500, but you'll be done. I'm like, oh, let's do that. So different levels of purchasing avatar based on people. Many people just decide, hey, I want this to go sooner, faster. I want this solution. I'm willing to pay for that end result. And there are people in Amazon and in the world who are willing to do that. Why is that important? Why do I tell that story? The end result is the cost doesn't always attribute to the output of the product. It is the emotional control or the solution that's coming from it. So as you look at those products, you want to consider what was the emotional driving factor behind that. And if you see that product being 50 to 100 or 100 above, then you should automatically understand something very basic at this first level, numerical analysis. And that is, it's most likely going to be profitable. It's most likely going to be greatly profitable, more profitable than selling a $30 or less product in the marketplace, meaning the manufactured cost of that product and the shipment and the marketing and advertising and storage and fees and other things that I have to account for in the business means that my net profit, okay, the last bottom line profit that I will put in my pocket, the cheddar that comes out every 2 weeks, is more important than those other numbers. Because that gives me money to power my business, money to power my household, and money to grow and expand. Okay. So many people make the wrong decisions about products in that way. They don't consider those numbers correctly. I want people to consider products that have, more than $10 to $20 in profit per unit. That's after your cost and fees and Amazon fees and everything it takes to do that. Why? Because my experience building 7, 8, and 9-figure business is you do not get to that level of scalability while basically increasing profits and moving less units, which costs more money. Okay. Everybody thinks that let's just sell 10,000 units and we'll make a lot of money. Well, that comes at a cost. It comes at logistics and warehousing and freight and transportation and a lot of other costs. If that 10,000 units gets me $10 in profit, okay. But if that 10,000 units got me $20 in profit, now we're starting to see a totally different kind of business model. So getting into the numbers is very important. So this takes this concept of any business building in e-commerce, even Amazon or anywhere else, from the beginner side hustle hobby business into running this like a really professional business with a P&L, bookkeepers, an LLC, and starting the whole business correctly from the beginning with the end in mind, right? Building a tangible asset that I can scale on. And getting those numbers correctly is very important in business, as I'm sure you can imagine.
So thanks for that. That was awesome. I'm sure you could add quite a bit more to
just I'm gonna pause
that piece to it. Yeah. Would you be willing to come back maybe at a later date and just kind of continue that conversation as far as, hey, how do we figure out what products are available to us?
No, awesome. I would be honored to do that. Absolutely. Because there's some other components in that decision-making process, which I'll give you the 30,000 real quick.
Yeah.
And then I'd be honored to break each of these topics down because I could go about an hour on each of them
Yeah, that'd be great. I'd love to have you back.
The next one, of course, is that, now we've identified some product pipeline. We can literally get it from our own, what I call urban mining hack, which is literally going into your environment, your household, and the products you purchased, and going into the activities that you do every day, every week, every month, from soccer practice to all the other things you're doing, and just look at what you're buying.
Yeah.
Look at the emotional component. And taking it by the numbers just means looking at the first level product analysis and saying, well, could it be profitable? I can do a quick research on the web and see, well, people are selling these products at this price point, and then I can see they're selling it on Amazon at this price point. Does it even remotely look profitable? If it does, you got a first level analysis done. So one of the other things we do here in business is we don't marry our products. We can go steal plenty of girlfriends from the marketplace, right? Because the Amazon has a lot of girlfriends in there. There's a lot of products and a lot of brands and a lot of opportunity with that data setting right in front of us, right in front of Amazon. We don't have to guess. And that's because that numbers component dials into understanding our competition. Not marrying our products, okay, means that eventually we will decide, are they worthy of our time, energy, and money? The product has to prove itself, and then I'll marry the product. Now, it sounds an inverse relationship. I'm a married man, and I do believe in people getting married before doing everything else in life, but that's my personal opinion. The end result is that on the Amazon, I can take plenty of girlfriend products, test them at the market, have no love for them other than the value of what I believe they will produce for the customer I'm trying to serve in the market, which is extremely important, not just self-serving for profit, but actually providing great products that serve that customer solution, and of course want them to come back and buy more from my brand. Okay, very important, brand building. But also understanding there are all kinds of wonderful opportunities. The next one is actually how to get traffic. Amazon's a river, but it's also a tree. Okay, it's this big giant technical filing system, and it's a river of traffic, literally 200 million people flowing by every month. And for each of these product types, there's a river of traffic flowing. Most Amazon, side hustle, amateurneurs, wannapreneurs, whatever you want to call them, who are just kind of playing and dabbling and not really understanding a lot of the intricacies in the business component. They're sort of sitting on that shoreline with their, cap on and their fishing lure out, but they're throwing into the dirt in front of the river, and they're wondering why the river isn't moving closer to their chair. They have got it wrong. They keep sitting there yelling at the river, move closer, when in actuality, there's a river sitting right in front of them, and they just need to go there and get in the water. So this is a big traffic system with keywords and traffic and opportunities to get products not only ranked, but to get a lot of visibility in that. And as you understand the visibility, you sell more product. Okay, that's very important to understand. And the whole thing that wraps this whole thing is I call the platinum principle. And we can dig into that too during that little get together whenever we do that, because that will be an opportunity to expand on the business building principles. That everything we do is building an asset that has an intrinsic value, so that in 24 months or 36 months, we could exit that business. We could sell it with a number of critical things in place from the very beginning. And through the growth of the business, we can cash flow it and make it very profitable. And then we can exit it and we can do the whole thing again, because the exit strategy is the business model. And we'll unpack that some more.
Yeah. Can we do a little bit of that right now?
Yeah. How much more? Which direction?
Well, kind of what I heard first was fulfilled by Amazon, right? We're kind of outsourcing that. Then what I heard was, hey, this is how we're going to find the products.
Yep.
Here's the market. It's going to be 27-year-old plus women. And then how we find the product is kind of sort of some testing. And then you go back and you look at kind of the stuff that you've been buying, right? And then you kind of put it out there. The more emotional the purchase, the more profit that you have.
Yep.
The business part that you just mentioned, I was hoping to touch on that a little bit, right? Because I think our listeners are looking at this as an opportunity to create passive income.
Yeah.
And so if we could touch on a couple of the things there is, hey, how much time does somebody need to devote to potentially doing this?
Okay.
How much money does somebody need to devote to doing this? And what would be the expectation on maybe that exit strategy that you just addressed?
Yeah. So usually in the capacity in which I want people to understand the business model, the time is sort of going to take what it takes when you dedicate it to the activity of this business stream versus another one. It may be more comfortable for you to expand into your real estate because that's a process you've known for many years. Yeah. It might be interesting for you to spawn off into e-com and look at how do I open that channel faster. I usually want people to dedicate at least 10 to 15 hours a week to learning the process. And following a game plan of steps, as any good mentor would do. The idea is obviously to be understanding of the time, the activities, and the actual activities that should be worked. And of course, the money that has to be involved to be deployed to a business model like this. I usually want business builders to understand if they're serious about an exit in 24 months, and this is the goal and objective of the e-commerce business model, then they should be willing to deploy $50,000 to $100,000 in the first 12 months to really hit this business hard. To achieve a 7-figure goal. I do that because I performance guarantee my clients. And so as they come involved, I'm criteria driven, and I want them to understand the opportunity of the business model. Building these brands on the Amazon channel is something you can actually exit. Okay, just the Amazon channel itself. Now we call it being Amazon channel locked or being channel locked. So I really encourage my people as they reach past 7 figures in revenue and a minimum of 15% net profit in the business, minimum. If they can get to 18 or 20, even better, because e-commerce can absolutely do that. Is an opportunity for them to then take that channel and exit it anywhere between 3 to 4x at the time of sale. If they are willing to go another 12 months, take profits from that initial business growth and put it into a direct-to-consumer channel, opening another leg of division, if you will, for the movement of those products through different mechanisms. Okay, your own website, traffic, Facebook, Instagram, etc. Then you could see anywhere between 6 to 10x at the exit within 24 to 36 months, depending upon how fast you open those channels.
Neil, sorry to jump in there, but at that exit, who they selling to?
So in my case, they are, if they're coming through us, they have we have Voltage Portfolios, which is a group of accredited investors, hedge funds, and buyers who are looking to buy these companies so they can move them into their passive portfolios. Or there are connections into like places like Quiet Light with Joe Valley and others where I have a network that I can negotiate with them, lead them through the sale and help them understand how to actually do an exit of an e-com business if they've never done one. We will mentor them and walk them through that entire process. Now, as we take a commission from that, that's our net in the game. We all win because I'm going to negotiate higher. I'm going to make sure their profitability is good, and I'm also going to make sure they don't get screwed over in the marketplace at the time of exit, and make it a very simple thing. Now, you mentioned passive. What is passive in definition? Everybody thinks passive is 100% hands off. No business person in their right mind puts a business out there that they run 100% hands off. What I like to refer to it as in my language is an almost automated income. If there's a business I can run for 5 to 7 hours a week that makes me anywhere between $20,000 to $50,000 a month in income, I consider that to be almost automated passive income. And that's how these businesses are set up. When they're structured correctly into SOPs, standard operating procedures, OKRs, objective and key results within the business growth. You don't need the employees, virtual assistants, virtual workforce. You can scale this up to 7, 8 figures and not have any of that infrastructure or overhead and be making very nice cash flow and profitability before you go to exit for 5 to 7 hours a week, maybe 10, depending upon time of week and activities.
What kind of background would somebody need, or what have you seen? Maybe some of your most successful students, they have a specific background or skill set?
Well, let me talk about a couple of them, and that'll kind of maybe answer your question. Daniel, for example, who's done very good in his business model and will hit about 1.2 million in August in his first 16 months in business. He has a degree in dirt management, as he likes to jokingly call it, golf course management, and a degree in theology. So when he's not doing some preaching or working in his yard, he's running his Amazon business. So it was an aptitude of business and knowledge that attracted us to work with him. While he didn't per se have an e-com business, number one, he wasn't running any other technical businesses in that nature. He was able to get his family involved, which was important. Him and a number of other people from Bry to Jason and others in our group, even Susan and a couple of other people, ladies in our group are involved because they brought their kids involved. They are creating alternatives of education through this mechanism. They're creating wealth alternatives for their children. And I'm talking about kids that are like, 13, 14, 16-year-old who were involved with their parents at their dinner table doing these businesses. And in Daniel's case, his daughter's actually spinning out her own business now on Amazon, and she's 15. So the opportunity for her to create that is done at that moment. So the other type of things I look at, a lot of people in my businesses are already successful in their careers. They are typically highly successful in their careers, whether it's multiple Chick-fil-A franchises or 9 Subway franchises or 1,000, short-term rentals or real estate. What they're looking at the e-com model is basically another revenue stream to add into their portfolio. And while they can dedicate 10 to 15 hours, they are also using almost automated or passive income in their other streams. And it's easier for them to open this up and deploy the capital and then see the results come from it. And because Daniel and his wife are very good in the young living space with their income over there, she runs the predominant aspect of that. And Daniel said, well, I'm going to go take this and run with it. He had the time and capital to do it, and that's allowed him to have some success with it. Typically, any business situation, regardless of e-com or not, I'll just end on this point, will have 3 major failure points. And people need to understand this. And I usually don't want this to be the first time they fail in business. So I definitely have an application process, and I'm typically looking to see what people's histories are. They need to understand that you can come in overcapitalized, which can lead to complacency and can be a big failure in business. You are undereducated, because you may think you know enough, or you don't actually really know enough. And the end result is you don't know how to apply the capital correctly. And the business will fail. I actually have an aggregator I'm talking to right now who's in that component. They bought 2 businesses and the $6 million they were funded, and right now they're going to be in a lot of trouble. So they're coming to consult with us because they have more capital than knowledge. And that problem is going to lead them to trouble. And the third one is being underfunded. Underfunded is most obvious one in most business people. They can't simply negotiate the time and distance to start the business before it comes into profit, before they run out of capital at about the 11th hour. We've all seen the meme with the one guy who's digging along and the one guy who gave up, and they're both within like an inch of the gold mine. Yeah. Typically, people will be undercapitalized. They may have the knowledge, but they simply run out of money, activity before they actually make it to the gold mine, and they're usually very close. So I'm looking for people who understand those things in life and business and realize that they can't climb this Everest mountain of business, which is e-commerce, without taking a Sherpa, because I've been up there 15 times already. I'm the guy that gets to sit on the side. It doesn't get put in the pictures and hangs out and goes up and down and makes sure everybody doesn't die halfway up the summit. That's what we do.
Okay, Neil, let's mind if we go back a little more in some of the details.
Sure.
Like a couple of questions popped up to me is, I know that you help. It's great finding the avatar, who's your customer, then whittling down to the good product.
Yes.
But let's say we find this product. How in the heck do we buy it?
Mm-hmm. Yeah. So unlike the other models we mentioned a minute ago, where I might be arbitraging or wholesaling or doing some sort of format with someone else's branded products that I've discovered, with private label, okay, the difference between private label and those others is I'm actually having this product manufactured for me at a facility. It's created to my specifications. It's going to be within an LLC. It is going to be what's called brand registered on Amazon, registered as an actual brand in a business. And then I'm going to be able to brand trademark those products. I'm going to have a slight innovation. We don't need inventions. Innovation is going to be a form of invention. This is not a net new product no one's ever heard of in the marketplace. That's what a lot of people make mistakes. There are now almost 700 million products in Amazon. Any one of those products could be successful with the right criteria. So you don't have to, we like to jokingly say we're number 2. It's okay to be number 2 because number 1 already came in and took the brunt. Number 2 is me coming in and riding on their advertising and marketing and the space that's already there, the competition that's already there, and coming in with a slightly innovative product that's better and having that one created. So the products become ours. They become part of the intellectual property or the IP of the business, which is important for that exit. Okay. These products are created and manufactured under our specifications.
Okay. So who's calling up the manufacturer? And because I'm assuming this might be done overseas, like who's overseeing that connection?
So we do in our space, I call them CEO operators. So initially you become the operator, understand the different components of the business. And initially you're the ones that would start some of the negotiations. We make it simpler with people because there are things called sourcing agents. A sourcing agent is someone who is literally employed on the ground in the location where the manufacturers would be. They are usually bilingual, and the ones we work with have been trusted for a long time. We have them in about 5 different locations around the world, and they help with quality control, negotiations. You speak to the sourcing agent. They will go out to multiple manufacturers they work with and come back with bids and information. Their job is, of course, price, negotiations, quality control of products, and a lot of things they do on the ground that doesn't require me to be in India or Taiwan or Bangladesh or China or wherever the products are being manufactured. So that sourcing agent is someone that you speak to, the CEO operator, to start the business and understand the logistics and get the pipeline created. I want each operator to work the business section, even to become dangerous at doing it, but have enough knowledge to understand that when someone comes in on a standard operating procedure or an OKR and an SOP, that they know what that person should be doing within reason. And that person can take over those tasks, and each task that's taken over makes it less time for me as the CEO.
I've written down a couple questions here. How competitive is this industry? How big is this industry just in terms of dollars?
If you look around your space right now in your office in the close, how many things do you see right now that you bought?
You know what's funny?
Everything.
I'm thinking when we built this, it was all about Amazon. Like
everything came like the next day.
Yeah,
everything came the next day from Amazon, right? So there's competition, and then there's hyper competition. So your answer actually leans to the question whether you recognize it at this moment or not, to hyper competition.
I did not know.
Yep. Competition is good. Competition in all things. Pepsi and Coke, McDonald's and Burger King, everything, Walmart and Target. They even set up next to each other. CVS and Walgreens, they set up next to each other. Competition breeds control, opportunity, and obviously the valuation of the brand comes from your ability to compete directly in the market while obtaining better customers, better products, better profits from your activities. So competition is great. It's the lack of competition that will let a lot of businesses actually fail, or their inability to correctly understand who that competition is and how they should actually approach, innovate, and outmaneuver them in their marketing. So competition is not the problem. In fact, that's the opportunity. So if I'm looking at the market, if I'm identifying those products, if I'm now going into my competition research and saying, well, who's selling this in the market already? I want to identify those 4 to 5 people who I'm going to destroy in the next 9 to 12 months. Destroy in a nice word, like business. Business is war. Go read The Art of War if you want to understand this. There are ethical ways to go to war. There are, ways to do things properly, but there is a way to go to business with competitors. Know that all the competition is there, already making sales for those products, already potentially making millions of dollars a year or even a month, and go in and compete directly head to head with them, out innovate them, out market them, build a better customer satisfaction journey, and then take over and dominate that market in a matter of months or years.
Neil, you gave me permission to ask a dumb question at the beginning of this, so I'm going to do my best to ask this one.
He's good at it.
I said if there was anyone that might have dumb questions, I wasn't picking on you.
We all knew who you were talking about.
Oh, okay. Well, that's nice.
I have clients that are building or, have engaged with other companies to do this model. And my kind of just brief understanding is that they're actually using like credit cards and those things to buy inventory, turn around, mark it up, and sell it. Yeah. Can you give us maybe some an overview on the differences between kind of what you're describing and then also the pros and cons of kind of that business model?
Yeah, that business model is really referred to as a drop shipping or a wholesaling model. Yep. And that's typically an Amazon or Walmart automation drop shipping type of thing where you pay in $35,000, $50,000, $100,000 and their team goes out and does arbitrations and you have to provide a credit card and they give you an Amazon account and then you split the profits with them in that model. Does that sound familiar in the model?
Yeah. That's it. Spot on.
Okay. Don't do that. Number one. Okay. Just for, that's the simplest way to get to the answer. Now you may not trust me in that answer, but if you go do your diligence and you're an actual business person who operates a business, you will understand very quickly why you shouldn't actually put money into that. The lack of control, the ability, and putting money into a profit sharing should never happen in a partnership until you've had a walk before you run strategy. And that is a literal run with your money. And sometimes people refer to that as friends, family, and fools. So at the end of this, right, is deploying capital in a smart and strategic way in which I have an operational control. You have no operational control. You don't own those accounts. I ran into people who literally spent $30,000 to $60,000. Amex shut their credit card off, or Amazon had killed their account, and the whole model falls apart. There's no intrinsic long-term value to the business model. I don't want to buy it. None of my shareholders and people want to buy it. You're building a new job. You're basically taking someone else's brands and flipping them for profit. I call that a pure capitalism model. What I'm referring to as a capitalism model, it serves the market and provides not just profit for the company, but a great product and service. I'm not just flipping somebody else's brands. I'm actually building a brand that has value. So I run from those, and I ask people to run from them too, because you can get shut down. In our model, no, you have a business. It's structured correctly. You're within the terms of service. And by the way, you can go do your diligence online real quick and find out drop shipping on Amazon is against their terms of service. So those accounts and those businesses come to me all the time. Can we buy your accounts? Can we buy other accounts? Do you have other accounts we can buy? Because they're churning and burning through Amazon's terms of service and they're losing their accounts and then they're replacing them with new ones. That's just part of the business model. It's a cat and mouse game. Business does not have to be that difficult. Okay. It can build organic and intrinsic value that you can literally reduce your time while watching the value of the business go up. And that's the value of doing brand building with IP in an actual business model.
Awesome. Thank you for that. The other last question I had was, you talked about hedge funds coming in and buying this stuff.
Yep.
My kind of only understanding of real hedge funds as far as is kind of how it relates to real estate, and they kind of ebb and flow into certain markets based upon how much money they have. Have you seen patterns in the hedge funds over the last couple of years?
Absolutely.
Last 9-10 years, are they really heavily into this business now or not so much? And what do you see moving forward?
So when I said I got into this business in 2011, I got into business myself in 2007 after leaving IBM. And at IBM, I was building businesses within businesses in different verticals. That's what we would take a new business, a new opportunity, and we'd build that inside of that company. And IBM was one of the leading people that were helping to do that inside of that. So as I built businesses and learned how to grow them, when I got to the Amazon period of time, I recognized Amazon's channel as an opportunity to build a business. It's just the first place, it's the first marketplace I took my products to. Because of that, I knew there was a maturity that was going to happen. It's why I spent so much energy and time doing it, is I saw this 2-lane highway that I believed was going to turn into a 7-lane, major road. And it has become a major 7-lane highway of traffic online for purchasing. Everybody knows Amazon now, and they all know you can get stuff in some places in an hour. So when I built that, I knew that at some point, the market was going to shift and adopt, as all markets that mature and grow in industries have ebbs and flows and growth periods. They have adoption rates that turn up. We are still in the growth adoption phase of Amazon being seen as a full business channel that can actually support a full business model. The maturity of that happened during the pandemic, strangely enough, because people were wanting to buy a lot more, of course, and Amazon was one of the fastest places people who didn't like to purchase or trust online ended up having to go to that location and were forced into a situation where they had to buy products online now, where they didn't do it before. So the growth increase adopted. About 24 months ago, one of the first, what's called an aggregator, Amazon aggregators, popped up with a hedge fund investment backing them. They are now known as Thrasio, one of the bigger of the 42 aggregators that are out there now since this time. Over 12 billion in capital has been deployed through those funds into those businesses in the effort to acquire these brands and grow them into bigger brands. These aggregators take on the capital, they put money into the brands and build the brands, build up the people, grow the brands, and then either sell individual or bundled brands together to higher hedge funds and higher business markets and higher corporations, etc. So the end result is it matured very fast. It matured extremely fast. And at this point, one of the things we're going to see, and I definitely predict this is going to happen, from my vantage point, is aggregators are going to consolidate this year. They're going to be forced to consolidate, I believe, down to about 10, maybe a little bit lower, maybe a little bit more.
You said there's 42, so down to 10.
Correct.
Is that right?
It's a market capitulation. There's a thing that's happening right now in which people don't truly understand how to operate an e-commerce business. So they're hiring as many warm bodies as they can and trying to teach them how to do it. But without any experience and any terms and any seeing the business ebb and flows and the idiosyncrasies of Amazon's platform, its system, its algorithms, and the way that customers do things, there's average of 100 recs open at most of these major companies they can't fill right now. And what we're finding as we continue to talk through them and talk to others is they can't find the expertise fast enough to keep the brands up. And when the market is hitting competition and problems with price points and stuff, they don't know how to deal with it. And so the brands are going down. So the CEO is obviously going to make a decision for the investment group. The CFO is going to have to draw a line across the P&L at the bottom somewhere and just say everything that falls below this point, we got to get rid of it. To get rid of it, we got to lift up our investors. We got to lift up our P&L. So at some point, there's going to have to be a consolidation, a sell-off, a capitulation in the market. It's kind of a known thing to happen in industries as they mature, right? We've seen this multiple times across multiple industries. But yes, it has now matured to a point where Amazon-only business channels can be sold relatively well independently to these aggregators and backed by hedge funds and SPACs, special purpose acquisition corporations that are out there really for, to deploy investment into other places.
I'd like to say one thing. I appreciate you explaining all the acronyms you used.
Yeah, can you go back and slow it down? I would not recommend, nobody ever recommends that I do podcasts and you listen to it at 2x because I will sound like a chipmunk.
No, not at all.
Slow it down.
Man, yeah, man, thank you very much. And I think we should wrap up right here. It's a great spot. But I do want to invite you back because there is a ton of information there that we haven't touched on that you just kind of hit the tip of the iceberg. We'd love to have you back for maybe a couple series and to extend this conversation. Would you be open to that?
I would be honored. Thank you. I would love to do that.
So since we just did this on the fly, we don't have dates or anything yet, but what we will do is we will set up a link in the show notes that you can put in your email address. So when we are ready, we will go ahead and send you the information.
And let's do it real simple, guys. Like we'll do it on a live Zoom with people who can come in as panelists and ask questions. And we'll do it on a really open kind of almost a mini event format, if you will, and let everybody just kind of join in and be a part of that.
Perfect. That would be great for them to be able to ask questions. And
absolutely.
what we would do is if you're okay, Neil, we will take those recordings and just add that into our course, so people, members of the course, can go ahead and watch that as well.
So Anthony,
That would be fantastic.
So
Yeah.
Anthony can rewatch this episode and pick up on more.
in 0.9x.
Yeah.
I think it'd be good because, you know, there's a lot of questions. The industry itself has grown, and I'll just kind of finalize some things in people's minds about the opportunity that is e-com. You know, about 24 months ago, right ahead of the, you know, actually it's been 24, 36 months. Time is flying by, 2-3 years. So fast. But anyways, the point is that this market has matured greatly from about 4.9 trillion in overall global e-commerce sales. It's predicted to be about 6.7 trillion in 2024. We're sitting at about 5.5 right now, coming out of the post-pandemic. So just to be aware, the e-com market is by no means slowing down. Its opportunity for products and innovations and growth is by no means slowing down. So whether or not you think you could get 15% net return or 18 or 20% net return in 12 months off your money, I know I'm getting it in e-com. I know I'm getting it in the physical inventory of pulling cash out of, you know, other places and putting it to work in the inventory, which is, again, a hedge against inflation, honestly, because it is like any other physical asset that appreciates. I can raise my prices, change supply chain. My physical inventory goes along with it. And that's one of the ways I love to deploy capital. People in real estate like to do that in other ways, and maybe people in real estate want to deploy them into inventory. I've got people doing that too. So just think about that in terms of where to put your money for the next few years.
Awesome. Excellent, Neil. Thank you very much, man.
My
Thanks,
pleasure,
Neil,
guys.
and go make it a fantastic day.
Take care.
You too.
Thanks for listening, and be sure to subscribe so you don't miss out on the next episode. Also, check out our website, infinitewealthconsultants.com, to find our podcast along with other additional resources.